Good evening, ladies and gentlemen. On behalf of the Ahmedabad Management Association, I welcome you all to this 42nd consistent budget analysis session. This is for 2022. And as usual, we have Professor Bakul Darokia and Mukesh Bhai Patel with us, who will be analyzing the budget. And without taking much of your time, and before I hand over the proceedings to Dr. Savan Godiawala, our Vice President, I'll welcome our esteemed guests with a bouquet of flowers. Please. Savan, please. Thank you.
Yep. Thank you, Divyesh Bhai. I hope I'm audible. Yeah, respected Bakul Bhai, so nice to see you again year on year for this very sought after event. Good evening, Mukesh Bhai. Good evening, ladies and gentlemen joining this meeting, as well as those who are watching this live. So once again, we are here with how many? I'm sure I'm missing the number, but it is more than 30. Mukesh Bhai would certainly put the right number. It's 30 years, Mukesh Bhai, more than 30, right?
42.
42. My goodness. So it's 42, and so we are here, and I know it is for the two gentlemen who have been giving us a lot of insights and knowledge on what is happening in the economy and taxation, as well as the real dissection of the budget. So without further ado, I would want to introduce Shri Bakul Bhai and Mukesh Bhai. Both of them do not need any introduction otherwise also, especially on this platform, but still it as a protocol, as well as for the people who are joining fresh from all parts of the maybe nation and world, this would be helpful. So Dr. Bakul Bhai is a former director, IIM Ahmedabad. He has been a director, International Management Institute at Delhi, Adani Institute of Infrastructure Management, and many other institutes. He has been a doctorate in economics, 47 years of experience, and during his tenure at IIM, he occupied a Reserve Bank chair, as well as he was a dean, and then of course from 2002 up to 2007, he has been a director at IIM Ahmedabad. He was awarded out of course, so many awards, the Best Professor Award at IIM, and guided several PhD students that he has done over his tenure. Dr. Dolakia is an awardee. Award has been awarded Padma Shri, a Bharat Asmita National Award. We also received a prestigious IMA Award of Excellence in Academic Leadership, among many others. And he has been a board member of Reserve Bank of India, Western India Board, Western Area Board from 93 up to 2001, and chairman of National Board of Accreditation. Dr. Dolakia, as we all know, has worked on numerous government committees, including the recent one, Rangarajan Committee on Pricing and Taxation. He's authored 12 books and has been part of and has monographed and written more than 50 research papers. So thank you, Dr. Bakul Bhai. Very keen to listen to the economic analysis, and of course there are a lot of questions that I have, but we will take it at the right time. I will also introduce Mukesh Bhai right at this time, and then so that I can hand over the platform to the two dignitaries and two important speakers of the day. Mukesh Bhai, of course, again, doesn't need any introduction. He's sitting at the place where he has been, giving us the legacy. He has been, of course, past president at AMA. He is a president, Indo-Japan Friendship Association, founder of Japan Information and Study Center and Zen Kaizen at AMA. And I'm sure a lot of you might have visited this place, but you must visit the Zen Garden at the Kaizen and the Kaizen Academy at AMA. Managing Director at International Tax and Investment Consultants, an eminent lawyer that he is, an international tax expert involved in legal education and tax journalism. Mukesh Bhai has authored number of acclaimed books and hosted regular TV shows. We have been seeing recently some shows which are sought after again. An institution builder, I mentioned past president, Ahmedabad Management Association, Gujarat Chamber of Commerce and Industries at Ahmedabad, and all Gujarat Federation of Tax Consultants. Mukesh Bhai is a director on several companies, leading by public companies board. And on the other side of that, he is, and that lot of people know, 151 times blood donor that he is, has visited Japan 35 times. And if you see any pictures around him in his house and office, you can say that what photographer he also makes out of such a professional career. So thank you so much, Dr. Bakul Bhai and Mukesh Bhai, for your presentation or your insights that we all are looking forward to. And I will hand over, as I think in the sequence, first Dr. Bakul Bhai can give us the insights on the economic aspects. And of course, Bakul Bhai, that I cannot hold myself. Very keen that this 39 lakh outlay and a huge infrastructure outlay, would it be inflationary at all? One. And two, maybe the budget is done as if COVID is gone. So is it that all these things would happen? What happens if COVID sustains or continues a little longer? But yes, we are keen to hear you. Over to you, Dr. Bakul Bhai, please.
The president of Ahmedabad Management Association, my learned, distinguished colleague, Shri Mukesh Patel, the members of Ahmedabad Management Association, and all those who have joined online for this budget analysis, which, as the president mentioned, is the 42nd year in a row that we are doing it at Ahmedabad Management Association. And it has been my immense pleasure to be in your midst on the evening after the budget. And this we have been consistently following. Now, this is the fourth budget that Nirmala Sitharaman is presenting. And like previous ones, this budget was also presented under fairly challenging scenarios. As the Vice President mentioned, that the budget is presented thinking that COVID is gone. I don't think that anybody in the right frame of mind will ever assume that. And Nirmala Sitharaman has certainly not assumed that. It is abundantly clear from whatever she had to say. In fact, right at a time when all of us thought that we have overcome the second wave of COVID and all the tragedies that the second wave brought, which are far worse than what the first wave, which happened in 2020, had brought about. The world was hit by the Omicron, which we now call the third wave. And the spread of Omicron was very wide. Now, so domestically, our economy was barely recovering from the massive shock of the pandemic, which we suffered in 2020. And therefore, the 2021 was the first year in the history of Indian economy where our real GDP growth as well as nominal GDP growth was substantially negative. Now, it never happened in the history of post-independent India that nominal GDP growth turned negative. Now, we were barely coming out of it in the year 21-22, and the second wave hit us very badly. As we recovered from the second wave, the third wave in the form of Omicron hit us again. So we had fairly tough, challenging situations to handle at the domestic front. But friends, let me also tell you that compared to last year, when at least the world economy was on an ascent, and the International Monetary Fund had predicted that the global economic growth is going to jump substantially in the year 21-22. This year, IMF released the forecast of the global economy in January 22. It's only hardly 10 days ago that IMF released the forecast. So this year's budget is presented in the backdrop of a challenging global economic environment, more challenging than it was last year. The latest report of IMF, which was released in January 22, says, and I quote, "The global economy enters 2022 in a weaker position than previously expected. As the new Omicron COVID-19 variant spreads, several countries have reimposed mobility restrictions. Rising energy prices and supply disruptions have resulted in higher and more broad-based inflation than it was anticipated earlier. Notably in the United States, many emerging market and developing economies, the ongoing retrenchment of China's real estate sector and slower than expected recovery of private consumption have also restricted growth prospects. Global economic growth is expected to moderate from 5.9% in 2021 to 4.4% in 2022, which essentially means that 1.5% decline in global GDP growth rate. Also, most of the advanced countries are going to gradually move towards withdrawal of fiscal benefits and monetary accommodation, which was granted earlier. And in 2022, we would see the tapering of all these benefits which were given, and interest rates will start to rise. This scenario will obviously adversely affect global liquidity and global trade in the year 2022. This is going to have a negative impact on India's exports and FDI and FII inflows into Indian economy, which would result in lower growth prospects for Indian economy in the financial year 22-23. So this was a challenge that the finance minister was facing when she was preparing the budget. It was imperative for the FM to strongly counter these global threats. Moreover, the significant impact of the second wave of the pandemic during the first half of 21 and the emergence of Omicron threat in the second half slowed down the recovery of Indian economy during 21-22. We grew by 9.2%, but if the second wave and third wave had not happened with the intensity with which they happened, probably we would have registered a double-digit growth. We would have grown by 10 or 11%. Now, this year's budget required a strong focus on economic growth, not only in 22-23, but over the next few years to quickly regain the lost ground. And we lost a lot of ground in the last 2 years. That is precisely what the FM has delivered, in my view, through her sharply focused and primarily growth-oriented budget proposals, which were presented yesterday. With elections in 5 states scheduled in February-March, many had expected FM to present a populist budget this year. But it is indeed remarkable that she has chosen growth over populism. A tough choice given the compelling political considerations of short-term electoral gains. I truly admire the phenomenal clarity of thought, sharp focus on key objectives, propelling economic growth and reviving investment cycle, with less emphasis on short-term fiscal consolidation and remarkable transparency, as well as realism in the budget estimates of both revenue as well as expenditure. And all this with a clear purpose of achieving the credibility of budget proposals on the part of the finance minister this year, like she had attempted last year. No hype, no drama, no fuss, just business-like professional approach. This is what was the hallmark of the budget speech and the budget proposals which was presented yesterday. A classic example of this is the way she dealt with the much hyped issue of crypto assets. There was a lot of debate about cryptocurrencies and crypto assets in this country in the months before the budget was presented. While proposing a 30% tax on the gains made from transfer of virtual digital assets, which includes all the cryptocurrencies, she underlined that only the central bank of any country, which in our case is the Reserve Bank of India, can issue any form of currency. And she said, and I quote, RBI will come with a digital currency. Outside of it, buying and selling is happening and profits are being made. So nothing stops me from taxing it. Taxing them does not actually bring legitimacy. Now, this is as crisp and as clear as it can become. So I'm going to tax any profits that you make on transfer of crypto assets or virtual digital assets. And simply because I'm taxing it does not mean that anything which is not issued by RBI becomes legal or legitimate. The legal issues are separate and will be taken care of later on. Now, it was as candid as that. And this is an example of the clarity of thought in doing what was done. Now, regarding, and I personally believe that this budget has a high level of transparency and realism in all its proposals. Now, to highlight this, let me again refer to what she said. She said during her interaction with the media soon after the budget was presented that she has presented a conservative but realistic budget with realistic estimates. And I quote, the budgets are being made with realistic numbers. In last year's budget, it was well established that we gave the numbers, followed it up, and achieved it. We also brought on board certain expenditures that were earlier kept out of the budget, sweeping under the carpet. What we used to call extra budgetary items, which actually reduced the deficit way below what the real deficit was. And therefore, she very rightly said, our estimates are not unrealistic, they are transparent. Now, I would also like to highlight that apart from the choice between populism and growth that she made, the finance minister has also made another and perhaps less obvious choice between control of inflation by itself as a goal versus growth as a goal. High fiscal deficit of 9.2% in the year 2021 was followed by 6.9% this year, and this is bound to create significant inflationary pressure in the economy. And the economy is already plagued by supply bottlenecks arising in the backdrop of COVID pandemic in 2020 and 2021. A pragmatic approach to budget, a conservative approach to budget would have certainly emphasized tighter control of fiscal deficit in the financial year 2022-23 to mitigate the inflationary pressures. But that would have been at the cost of moderating the GDP growth target in a situation where the economy was still reeling under the massive impact of the pandemic on GDP growth last year. The FM has boldly chosen the path of high GDP growth, taking the associated risk of high inflation. Now, this requires courage. This is a well-calculated risk which she has taken with guts and self-confidence, ignoring the conventional advice to be risk-averse. So we have a budget that raises capital expenditure by an unprecedented 35% under truly challenging fiscal position to deliver a high real GDP growth in 22-23, stimulating private investment, wages and production over the next few years, not just 22-23, but coming 2-3 years, to ensure that the growth momentum is sustained in the medium term. She has taken this bold risk at a time when inflation is a widespread phenomenon globally, and the wholesale price inflation in India has entered double-digit territory. Wholesale price index is going at more than 10%. Though, as of now, the consumer price index inflation is hovering around 5%, which is around the target set by the Reserve Bank. Now, let me come to, in this background, in this backdrop, let us analyze the budget proposals and what is going to happen to the economy. Now, like I always say, and I had said this last time, and just to remind, that budget calculations are always based on a projection of GDP growth in the coming year. That means in the financial year 22-23, what is the rate at which GDP will grow? Unless you estimate that, you cannot calculate the tax from various sources and also the impact of various expenditures. So budget calculations for this year's budget are made on the projection of 11.1% nominal GDP growth. 11.1%, all three ones. Now, that means the nominal GDP is going to be rising from 232,000 crores to 258 lakh crores. Now, based on this, we can say that the budget assumes, this is not a number that she has spelled out, but this is something which you have to read between the lines, like I always do over the last several decades. So I can infer that the budget assumes real GDP growth of around 8%, because the economic survey said 8 to 8.5%. So she would not assume less than 8%. So the budget assumes real GDP growth of around 8%, and that leaves you an assumption of inflation of about 3%, because that is what will give you 11.1% nominal GDP growth for the financial year 22-23. Now, if you recall, last year, the nominal GDP growth that she had assumed was 14%. That is, I'm exactly at AMA when I was talking last year. And I'd said that it would be, the 14% was a nominal GDP growth, which was based on the assumption of 10% real GDP growth and 4% inflation. Now, towards the conclusion of my speech, I had argued that these are conservative estimates, and in reality, the nominal GDP growth will be anywhere between 17 to 18% in the financial year 21-22. Friends, the real GDP, nominal GDP growth in financial year 21-22 is exactly 17.6%. From this podium, I had said 17 to 18%. I'd also emphasized that because instead of 14%, the nominal GDP will grow by 17 to 18%, it will create fiscal space for the government to spend more money. And I had estimated that the fiscal space would be somewhere in the region of 2 lakh crores, 2 lakh crores or maybe more. Now, the actual fiscal space turned out to be 3 lakh crores. And because of this, we could spend money in the financial year 21-22 in spite of the divestment target falling substantially short. The divestment target was a very ambitious one. 1,75,000 crores was a divestment target. We have achieved hardly 75,000 crores. So there is a shortfall of almost 1 lakh crore in divestment. Now, as against this 1 lakh crore shortfall in divestment, the buoyancy of tax revenues and revenue receipts is 2,90,000 crores. So it has absorbed this and generated additional 2 lakh crore of resources, which is what my calculation was, that there will be a fiscal space of about 2 lakh crores. Now, she had two choices. Part of this fiscal space you use to reduce fiscal deficit, and when you present the budget, come back to the House and tell the Parliament that, look, I had projected fiscal deficit of 6.8%, but I brought it down to 6.5 or 6.4 or something like that. Now, had she done that, the recovery of Indian economy would have suffered. So she did not do it. Instead, she came to the Parliament with supplementary demands in the winter session of the Parliament and got an approval for 3 lakh crores of extra expenditure. And that is the reason why the budget estimate of total expenditure last year was 34.8 lakh crores. Actual expenditure was 37.7 lakh crores. So that means practically 3 lakh crore of extra expenditure is what she incurred. It is this which has supported the economic revival. Our growth rate would not have been 9.2% if this was not done. If fiscal conservatism was the goal, we would not have achieved even 8% growth. Now, but 6.8% and 6.9%, which is the revised fiscal deficit, is more or less the same. So what I had said last time was that there would be supplementary spending and fiscal targets will still be met. All those predictions have come true. Towards the end of my session, I'm going to tell you something similar will happen this year. And I will give you my precise estimates as we proceed. But to begin with, let me tell you that 11% nominal GDP growth is extremely conservative. Given the budget proposals, and let me come to the budget proposals, the actuals will be much better. So let me highlight. Now, economists very often say that fiscal deficit by itself is not a bad thing. Fiscal deficit is bad if it finances consumption expenditure. But fiscal deficit is good if it finances capital expenditure. Now, if you see, the capital expenditure budgeted was 5.5 lakh crores and the actual was 6 lakh crores. So 50,000 was spent. However, because of the second wave of COVID and the problem cropping up with Omicron, lot of cash benefit transfer schemes had to be extended. And therefore, a lot of money was spent on continuing what we were doing in the financial year 2021. And that is the reason why the money went into the hands of the bottom 30-40% of the population. It's not correct to say that the government did nothing for the poor. It's that kind of a statement would be politically motivated, contrary to facts. Whether the government did enough is a matter of debate. But to say that the government did not do much for the poor is blatantly wrong. In fact, if government had not done anything for the poor, the fiscal deficit would have been much lower. Now, coming to this year, the budget estimates basically do what? The revised estimate of 37.7 lakh crore was the expenditure. The expenditure has been raised to 39.5. So the expenditure has been raised by 1,75,000 crores. Now, let me tell you, last year, the gap between revised estimates and budget estimates was 2,87,000 crores. That means the revised estimates of expenditure is 2,87,000 crore more than the budget estimate. As I told you, came with supplementary demands. Now, the base part is that after the budget was presented, there is a usual interaction of the finance ministry officials with the media and question answers. And at that time, the finance minister as well as the finance secretary very clearly said that if last year we could raise the actual expenditure much above the budget estimates, there is no reason to believe that we do not have that option this year. It all depends upon what the country needs. And the needs are evolving with the passage of time. So after 6 months, you would take a stock of the situation, and if required, she can again come with supplementary demands in the winter session of the parliament. Now, the fiscal deficit number, which was 15.9 lakh crores, this year it is 16.6 lakh crores. So the fiscal deficit is increased by 70,000 crores. And it is pitched at 6.4%. Now let me tell you that fiscal conservatism would have driven the finance minister to argue that let me bring the fiscal deficit below 6%. Now, if she would have done that, she would have removed the fiscal space of about 1 lakh crore. So the expenditures would have been about 1 lakh crore less. But what is important is that if your capital expenditure is growing up, increasing by 2 lakh crores, 2 lakh crore is the increase in capex, then overall expenditure is rising by only 70,000 crores. So she has cut down somewhere. And where has she cut down? Obviously, she has cut down on subsidies. That is where the lot of hue and cry. Now let us understand. In the year 2021, when the pandemic hit us, when the budget was presented on 1st February 2020, COVID was nowhere.
I think we lost the voice. Bakul bhai, sorry to interrupt, but admin, please have a look at whether the voice is going through or not.
So, at that time, the budgeted fiscal deficit was only 3.4%. Now, that 3.4% became 9.2%, which actually means that huge amount of fiscal space was created and the subsidies went through the roof. Like, for instance, the food subsidy was 5,40,000 crores. Normally, the food subsidy is around 2 lakh crores. So the food subsidy increased from 2 lakh crores to 5.5 lakh crores. And we have guys saying that government has done nothing. Now, where did this additional 3.5 lakh crore go? It went to the poor because the food subsidy goes there. Now, that was an exceptional year. Now, when normalcy returns, economy recovers, then this subsidy has to be rolled back. 541 cannot become the norm. Therefore, the budget estimate last year in 21-22 was 2.4 lakh crores. But the actual was 2.9. So she disbursed 50,000 more of subsidies because the situation demanded. Now that she has rolled back to 2.07. As I told you, the average food subsidy over the last 2 years before COVID was 2 lakh crores. And the same 2 lakh crores we are spending this year. But if your benchmark is the COVID year, then your benchmark is wrong. So therefore, it appears that the food subsidy has been rolled back, but no, it is normalization. Now, like this, the total subsidies that have been reduced is to the tune of 1,15,000 crores. That is a reduction in subsidies. Now, please remember that last year, compared to the budget, the government spent 96,000 crores more on subsidies because the need arose. If similar need arises this year, the government will spend because there is fiscal space to do that. But government has reduced 1,15,000 crore of subsidies. Now, when you reduce that 1,15,000 crore of subsidy, then with 70,000 crore increase in fiscal deficit, you can spend 2 lakh crores on capex. So what is the trade-off? Subsidies reduction versus capital expenditure increase. I don't have to go into all the budget proposals, the various infrastructure related proposals and the push which is there. I don't want to get into. You have already seen that in today's newspapers. You have heard it. So I don't want to get into that. But it's a massive, massive infrastructure pool which has been given and the money is being spent. There are no populist schemes and therefore this money is not being frittered away in populism. So focus remains that I want to revive growth. I want to revive the investment cycle. And I will cut expenditure where the expenditure is due, actually. Let me remind you that in the month of December 2021, she sent out a circular to all ministries saying that carefully look at your budget proposals and cut down whatever you think is inessential expenditure. Therefore, don't give me exaggerated thing. It is our mindset. Then let us ask for 100 so that we can get at least 70. She said, I'll give you what you ask. But if I find that you have exaggerated your thing, I will punish. So therefore, the ministries did a much better homework this time around. Now, sometimes you argue that, the Manrega contribution has been cut. Yeah, true. Manrega contribution has been cut. But then Manrega contribution had shot up like the food subsidy in the pandemic year. Now that was an abnormal level because all the migrant labor which was returning from urban areas to rural areas were all absorbed in Manrega. In fact, many of them did not return to the cities because they said that we are getting better pay here in Manrega. Now Manrega at that time in 2020 summer was a crisis management measure. It was not a normal economic strategy of generating employment. Normal economic strategy of generating employment is economic activity. Now, the other important thing, that all the schemes which the government has, how do those schemes get actually implemented at the grassroots level? They get implemented at the grassroots level through what we call the federal cooperative federalism. Because implementation happens at the state level, implementation happens at the district level, implementation happens at the tehsil level. Now, that district and tehsil level implementation is responsibility of which administration? It's the state government. Now, very often what happens is, when center disburses money, it goes to states, and then it goes to districts, and then it goes to talukas. Now at panchayat level, at taluka level, the money will sit in their accounts. It is booked as expenditure of the central government. So revised estimates will show that expenditure, but at the grassroots level, the money is not spent. Now, when the money is not spent, why do you pump more money? So now if you ask for status report, is it wrong? If the state governments protest that why you're doing this, then that is not true. So the point is, disbursement has to be commensurate with the administrative ability to spend and spend meaningfully. Therefore, wherever she finds that expenditure lines are saturated, there are surplus funds lying at the grassroots level, why would you put more money? Now, that does not mean that Manrega will fall. That means it will push the district administration to effectively implement the schemes. Now, let us therefore try to understand that all this misinformed criticism about reductions in certain schemes has to be related with, now sometimes we ask, what about the performance appraisal of the budgetary allocations? Now what will central government say? Central government say we have disbursed. Performance appraisal has to be done by state governments. Which state government is subjecting itself to this kind of performance appraisal? Which state government is coming forward to say that I am very poor at implementing Manrega? I am very poor at implementing many development schemes. So therefore, let us try to understand that it's very difficult to include all this in the budget because the states have to do the proper reporting and monitoring. Now, under these circumstances, let us understand that the capex increase. And what is it that she said? She explained the macroeconomic framework in very simple terms. She said that in the pandemic and the environment created by that, the companies have become cost conscious. They have started cutting costs. Since they've started cutting costs, they are doing well. They have become lean and thin organizations, efficient organizations, performing very well. But investments are not happening. Now, why investments are not happening? Very simple. Industries were shut down. No production was taking place. There was a lot of excess capacity. Now, when there is excess capacity, why would you invest to create more capacity? You will first utilize the existing capacity. So the existing capacity was not being utilized, and therefore the investment cycle was not coming up. Now, what she says is that let public expenditure drive the revival of investment cycle. Actually, if the GDP has to grow, what are the components? The components are private consumption expenditure, government expenditure, government capital expenditure, private capital expenditure, and exports. Now, exports are affected by global environment. Private investment expenditure is also created by the domestic economic environment where everything has collapsed. Private consumption expenditure, people have become risk averse. Nobody is spending. Therefore, the bank deposits are growing, but expenditures are not. So it has created a vicious circle. Now you have to convert this vicious circle into a virtuous cycle. And that virtuous cycle, so you break it somewhere. So where will you break? The only component of GDP which is independent of the global and macroeconomic environment in the country is public expenditure. And so the focus is on that. And within that, last year, the focus was on public consumption expenditure. This year, the focus is on public capital expenditure. Now, that public capital expenditure will create enabling environment where the private investment will automatically come. And when private investment automatically comes, it will generate income. Income will generate more investment will generate more consumption, and more consumption will generate more income. This is how the growth will be sustained. So her strategy is that in the financial year 22-23, the GDP growth will be driven by public investment. She expects that by 23-24, the private investment would revive and it would supplement the government's effort to sustain the rate of economic growth. And therefore, over 22-23, 23-24, 24-25, the GDP will consistently grow. And when the GDP consistently grows, normalcy will return. And when normalcy returns, fiscal consolidation will happen. So you'll go back to the situation of fiscal discipline. Now, this is the broad macroeconomic strategy that is there in this budget. And if I have to look at the various components of expenditure, she has not been conservative as far as defense expenditure is concerned. The defense expenditure has gone up. The transfer to states has also gone up very substantially, almost 1 lakh crores. Interest payments have also shot up because of the debt that we had to incur because of the past. So the only element of expenditure that she can cut is the subsidies, which is what she has done. Wages, salaries of the public servants cannot be reduced. So whatever was within her control, she has done it. Now, so it is prudent expenditure control. Meaningless allocation to schemes where delivery doesn't happen has been stopped. So it is some kind of rationalization of public expenditure on specific schemes. Now, all these measures put together have enabled her to put a 2 lakh crore jump in capital expenditure and still controlling total expenditure within the limits of only 70,000 crores and therefore controlling fiscal deficit. Now, let me tell you that where my optimism about the future of Indian economy comes. As I told you at the beginning, that this 11% nominal GDP growth is a very, very conservative target. In my view, with the massive push that she has given, and please remember that there are a lot of measures which will give a fillip to domestic industry. Now, just let me give one example. That defense expenditure is going to be 3,85,000 crores. And almost 70% of this is capital expenditure. Now, what is it that she has said? The defense capital expenditure, 68% will be reserved for domestic manufacture. So you just imagine, it's a question of 2 lakh crore of additional demand for domestic manufacturers of defense equipment. And we have built capacity over the last 2 years in domestic defense because of the Atmanirbhar focus. So this is just one example of how the domestic industry is going to revive. This is public expenditure driven revival of the domestic industry, which will lead to further investment in defense manufacturing, which will lead to further growth. Like that, there are virtuous cycles in every sector. Now, I therefore feel that if all goes well and we do not get a very substantive negative surprise on the front of agriculture next year in terms of weather, then the 8% GDP growth target that she has set will turn out to be conservative, and we might jolly well achieve 9% GDP growth. In fact, I won't be surprised if we achieve 10%. But I bet myself that 9% GDP growth next year we are likely to achieve. Similarly, inflation is not going to be contained to 3%. The inflation, which is the GDP deflator, is going to be at least 5%. So 9% real GDP growth and 5% inflation will give you a nominal GDP growth of about 14.5%. Whereas you have assumed 11. So 3.5% will be the extra nominal GDP growth that will happen next year, which will generate fiscal space. Now, the buoyancy of taxes, therefore, will continue. We will come out of the recession. Manufacturing sector will come out. Service sector will come out. And manufacturing sector and service sector, industrial sector and service sector are the ones which contribute to tax revenues, basically. And therefore, just as we ended up with almost 3 lakh crore of additional revenue receipts this year, with almost 2 lakh crores of additional tax revenue, we would be in for at least 1 lakh crore of additional tax revenue next year, at least, because of the economic revival. And the nominal GDP growth, which will exceed, will create another fiscal space. So in my view, the possible slippage of about 1.5 lakh crores, 1.5 lakh crores can be absorbed, and fiscal deficit will remain the same. Unlike last year, she has assumed only 65,000 crores of divestment target this year. Now, she was very vocal that it is better to be conservative and then overachieve rather than say 175 and achieve only 75. So the 65,000 crore of divestment target is going to be exceeded. So last year we had a shortfall of 1 lakh crore. This year we will not have. And that is the reason why additional fiscal space of 1.5 lakh crore for supplementary expenditure. So I won't be surprised if she comes in the winter session of the parliament to say that I'm going to spend this 1.5 lakh crore extra for doing all these various things. Therefore, I'm confident that we will grow at about 9%. Inflation with 5% will be under reasonable control. Now, if inflation is under control and high GDP growth, then please remember, so what is it that you have as a characteristic of Indian economy? Tax regime, stable. No change in taxes, direct or indirect. No, not much change of taxes. Policy environment, stable. I don't think that with the measures that she has taken and RBI is taking, the exchange rate would be greatly volatile. I forecast that the exchange rate of Indian economy will hover between 73 rupees to a dollar to 76 rupees to a dollar. It won't cross 76, it won't fall below 73. So you have an average of about 74, 75 rupees to a dollar exchange rate. So stable exchange rates, stable policy environment, stable tax rates, high GDP growth, moderate inflation. What else do you want to attract foreign investment? So foreign investment will come in droves in the Indian economy. In fact, the best part is the foreign institutional investors were all sleeping when she presented the budget. Next morning, when they woke up and they saw what she said, they were flabbergasted. And next day, they started putting money back in the Indian economy. In fact, the market grew today, riding on FII. So, foreign direct investment and foreign institutional investment will keep coming to Indian economy in 22-23 in spite of the tapering fears in the American market. So she has taken care of all possible parameters. And I am therefore confident about the bright future of Indian economy in the year 22-23. And hopefully, when we analyze the next year's budget and therefore present a performance card of this year, remember, I'm predicting a 9% real GDP growth, 5% inflation, and 14.5% nominal GDP growth. If these numbers are achieved with exchange rate remaining relatively stable, then the tax revenue would be buoyant. One final thing. Everybody was expecting that poverty will rise substantially because of the pandemic in 2020. There is nothing as of now to suggest that the incidence of poverty has substantially increased. And that is partly because of the direct cash benefit, the direct cash transfer that happened. I wish that sometimes the government comes up with the poverty estimates in order to tell us that all these fears about growing inequalities, whether they are correct or not. Let me also allay a couple of criticisms before I conclude. One argument about these inequalities is, that the rich are getting richer and the billionaires have multiplied their wealth. Now, come on, billionaires have not multiplied their wealth by snatching money from our pockets. Billionaires have multiplied their wealth because the stock market has gone up. Last time when she presented the budget, Sensex was at 48,000 to 49,000. And I had predicted that the Sensex by the end of the year would be at least at 55,000 crores, if not more. The Sensex, when she presented the budget, was 58,000. Now, the journey of Sensex will continue. Now, as long as the capital market booms, the promoters' wealth will go on increasing, and therefore they will become richer. That has nothing to do with generation of income. So let us not confuse inequalities of wealth with inequalities of income. Let us try and understand that. Inequalities were there, inequalities will remain. But if the poverty has not gone up in spite of the pandemic, then we have achieved a lot. And very few countries in the world would have done that. The second important, very common argument. Mukesh Bhai is going to elaborate on that. Now, the noise that I keep on hearing is that nothing has been done for the common man. Now, my point is, suppose you give some tax relief. Suppose you increase the exemption limit. Suppose you temper with rates. What is it that you will give on an average to a taxpayer? 5,000 rupees per year? 6,000 rupees per year? What will they translate into? 400, 500 rupees a month? Now, with that kind of a relief, you think that is a massive relief for the common man? Now, let us understand, personal income tax. Last year, that is 21-22, in the pandemic year, has gone up by 26%. Simple calculation. Tax rates have not changed. If tax revenues have gone up by 26%, the income of the taxpayers would have gone up by 26%. I mean, this is common sense. Now, what is it that the taxpayer is worried about? Income or some marginal relief on tax? I would any day prefer a finance minister who guarantees 25% increase in my nominal income. I don't mind paying tax. I don't care for tax relief, because if the economy goes down, my nominal income will not increase by 25%. My nominal income will increase by 10%. Then what will I do with the 5,000 rupees of tax relief? So let us understand. It is true that the tax relief will stimulate consumption. True. But what is more important? The more important thing is stability of the tax regime. And that is what she has really opted for. I think the common man should look at how much money goes in his pocket, not whether there is a reduction in the money that the government takes out. So long as the money that goes into the pocket in terms of per capita income and taxable income goes on rising, tax reliefs at the end of the day don't matter that much. Corporates have understood this. It is high time that people understand that. Finally, what in my mind are big negatives of the budget? The first and foremost is the rising trend of protectionism which is coming, which runs contrary to economic reforms. You raise duties in order to shun imports. You create quotas, like 2/3 of the defense manufacture reserved for the domestic companies and so on. So if you bring the tariff restrictions and quota Raj back, it is good as far as a firefighting measure is concerned, crisis management measure is concerned. But that by definition means that it should be transient, temporary. If this becomes the long-term strategy, it will do damage to the Indian economy. And therefore, this protectionistic mindset has to go. And reforms of the trade and exchange rates have to take the front seat again. I'm not talking about something which is the next 1 or 2 years, but this cannot be the strategy for the next 5 years. You have to reconsider this when the economy is back on the feet. Then you roll back all these things. And finally, there is a genuine risk of inflation. Inflation can run riots. Now, if inflation is not controlled, and if it doesn't turn out to be 5%, but turns out to be 8%, 9%, nominal GDP will go up. But that would again have the prospect of derailing the economy. So her challenge is she has taken the risk. It's like you want to score 20 runs in an over. You can't do that without hitting sixes. But when you hit the six, you must ensure that you don't get caught on the boundary line. And inflation is something that can take your wicket. And therefore, she will have to, in close collaboration with the finance ministry, various ministries, and of course the Reserve Bank, will have to monitor the inflation. If we manage with 5 or 6% inflation, all will be well. But if not, it's a risk. Now, these are some of the question marks that hang. But you have to take a risk. She has taken the risk. I wish her very well, and I sincerely hope that we achieve 9% real GDP growth with inflation around 5%. In that case, we will be riding at the top of the world by the time we are into February 23. Thank you very much.
Thank you, Bakul Bhai. I think absolutely insightful and very happy to note that there is an upside to the nominal growth and thus upside to overall, all sectoral growth also. And of course, public spending, very important that we got to learn that public spending in the circumstance is very essential, and thus the courageous budget is a welcome thing. Dr. Shri Mukesh Bhai, we are very keen to hear you. Of course, some significant or some, not significant so far as the individual taxes are concerned, but certainly something, coming from nowhere, the virtual assets and the compliance, voluntary compliance, we would be happy to have your analysis, sir. Please, over to you, sir.
Thank you. Thank you very much, Saban Bhai. Good evening, friends. The FM in the budget talked about digital India, talked about digital economy, and therefore, no wonder, Bakul Bhai, today, we are delivering our budget analysis also on the digital platform. It's online when we are able to reach out to friends here at AMA in Ahmedabad, all over Gujarat, all over the country. And Bakul Bhai, in fact, this year the feedback and response has been that there are so many friends watching us around the globe as well, just as the budget is being watched about. Well, friends, Divyesh Bhai and Saban Bhai mentioned to this very historic occasion of the AMA budget, which is into its 42nd year. I think, as we always say, FMs may come and FMs may go, but we go on forever. And this time, we are here to talk about, as he had to speak, of course, there were more tops than flops, from the budget docs. And I'm supposed to talk about the chills and thrills of the finance bill. But before I come to the finance bill, I would like to agree to disagree with Bakul Bhai's some points, and we often get into this jugalbandi also. He was of the opinion that the common man really did not need any relief. And he talked about cricket, and therefore, Bakul Bhai, talking in the parlance of cricket, you talked about 20 runs in 1 over. Here, there have been 4 balls in an over, and the over is still maiden because it's only 1 over. In fact, you don't even have 6 balls. You have only 5 balls to play. And the batsman, that is the taxpayer, is not given any opportunity whatsoever to score even a single run, not a rupee of relief. Let me point out, I would like to just take a couple of minutes to meet with some points that were raised by Bakul Bhai before I come to the finance bill. Let me first of all say that as far as the budget is concerned, and it being historic on the economic front for the nation, it's a budget for investment and growth, BEIG, and therefore it's a big budget, no doubt about it. But then when it comes to the common man, and let's not forget, Bakul Bhai, the common man, yesterday in the lighter vein, somebody was saying, and very aptly so, कि गरीबों को मिली सब्सिडी, गरीबों को मिली सब्सिडी, अमीरों को मिला रिबेट. आम आदमी, तुम टीवी देखो, तुमको मिला डिबेट. I think the common man is trying to find what is it in store for him. And Bakul Bhai, let me try to just point out that this buoyancy in the revenue is not because the real income of taxpayers has gone up. The revenues have gone up because of better compliance, voluntary compliance, because of the system, I would say, the faceless assessment, the artificial intelligence, the annual information statement. These are the drivers for the buoyancy in the revenue. Of course, the economy has done well. But just because the economy has done well, that does not mean that the common taxpayer and his household budget is comfortable. Let me point out, friends, that if I just take 5 of the key deductions, salary, standard deduction, ATC, savings and investment, your limit of 1,50,000, your Mediclaim for both seniors and non-seniors, your bank interest. If only I take these 5 things, I find that on none of these fronts during these past 4 budgets, a penny of relief has been granted. There has been, I don't propagate for raising of exemption limit because then you erode your tax base. I want the taxpayers' base to grow. But I would have loved, friends, if the finance minister had made it a win-win situation. On one hand, it would have been a budget for infrastructure, for growth, for all-round economic development, and she would have given opportunities to the taxpayer to participate. I didn't want only tax, refunds to come or reliefs to come to promote consumption. What you could have done is you could have said, okay, we are raising your ATC limit, and here is an opportunity for you to invest into instruments where the government itself is attracting, investment from all over. Why not from its own taxpayers? And in return, if you borrow, you would have given interest. Here, in return to your taxpayers who are parking their funds into the nation's economic development, you would have given them some tax relief. You could have said that, okay, we are trying to give. In fact, this is what I have always been propagating. There are countries in this world, friends, in the global economy, there are tax systems which have an inbuilt, at least for a few elements like your standard deduction, etc. The moment there is a rise in your cost inflation index, there is a rise also into those limits. Now here, as I said, for years together, 5 years, 7 years, 8 years, 4 years, all these limits, they've been static. And if I just take 4 years of the FM from 2019 to 22, the consumer price inflation index is on record, Bakul bhai, 15% inflation. Now, this and you are projecting another 5% this year. So in 5 years, if one has to bear the brunt of 20% inflation and with no tax saving whatsoever, not even an opportunity to participate in the nation's growth and economic development, well, I think the pinch is always there. See, last year it was COVID. As a disciplined soldier, the common man said, I'll stand by the FM. I don't expect anything. But this year, there was a close to 30% revenue growth. It could have been possible to align it in a win-win situation. Unfortunately, that has not been done. We still have 1 more year to go, and let us hope that it comes next time. With these opening remarks, may I now come to the Finance Bill 2022. In fact, as far as direct taxes is concerned, when the FM started with her Part B, she outlined the main focus, quoting from Mahabharata, and then what a tax administration should be, what should be the tax entire system of revenue collection. She highlighted, and rightfully so, 5 chief goals, starting from the stress on voluntary compliance, the simplicity of the tax system, a trustworthy tax regime, a system that reduces litigation, and obviously, overall in the budget, she had been talking, so the tax system could not have been the horse of that, that is ease of doing business. Now, we will need to actually analyze, because there are very little of incentives, we will need to analyze the budget proposals on this test stone of these 5 parameters. And there, while there are some very welcome provisions, there are some irksome, I would say, thorns, in the rose that the FM has offered. And these tax thorns, if they are not taken care of, I think they will frustrate, these 5 very laudable goals of starting from the ease of doing business to the trustworthiness, the voluntary compliance part, the simplicity of the tax system. So let me quickly run through, because this is exactly a day after the budget, and therefore you would very much want to first have a flavor of what are those key highlights of the finance bill. Let me run through that, and within the framework and constraints of time, I will try to focus on some of the areas which need more elaboration. Coming to personal tax, friends, as we all know, obviously the income tax slabs, rates, surcharge, cess have remained unchanged, except for, and the common man again felt the pinch here, because the only beneficiary of that bit of relief that came, which, let me tell you very honestly, I have been a strong opponent of surcharge. When this surcharge of 25 and 37% came, I used to say ki sar se badi pagdi, 37% on a 30% tax. So 37% had no business to stay. Well, it is still there on the other income, but as far as capital gains is concerned, as you are aware, friends, 111A, section 111A for short-term capital gains on listed securities and 112A for long-term capital gains on listed securities where STT is paid, there was a cap of 15%. So the only capital gains that were left out were under section 112, the long-term capital gains arising out of any shares of private companies or maybe debt-oriented instruments like units of mutual funds, etc. Or when you sell any other capital asset like land, building, gold, jewelry, etc. In respect of all these assets, the long-term capital gains are taxed, as you know, at 20% under section 112. But because of the surcharge, if somebody has income above 5 crores, the tax rate used to go up to 28.5%. And even if you were above 2 crores, it used to go up to 26%. Fortunately, now this 26 will come down to 23.9 and 28.5 would also again come down to 23.9 because 15% would be the cap. So the net relief for anybody over 2 crores would be 2.1% and above 5 crores would be 4.6%. It can be quite significant. So what I would say is this provision comes into effect from 1st of April, from the new financial year. So if you have any plans starting after this 1st of February, when you have been given notice to sell any valuable property or assets where you are going to get substantial gains and you are going to be in the bracket of 2 crores or 5 crores and above, well, wait until 31st of March. It could mean a lot to you because even if it's 10 crores of gain, you would save a healthy 45 lakhs. On the few small reliefs on personal tax, these announcements were made. They've only been formally legislated. And that is in regard to the monies that an employee has got from his employer or any other person, in case of either medical treatment on account of COVID or in case of a death, where he is getting, the family of the deceased is getting support from the employer or any other persons. Now, fortunately, there are no monetary limits. There are just some rules. As far as the employer is concerned, there is no restriction. As far as other persons supporting the employer's family are concerned, there is a 10 lakhs ceiling, the maximum amount that you can claim as exempt under section 56. So under two different provisions, under section 17, what you get from the employer is not treated as a taxable perquisite. Under section 56, whatever you receive, because the employer in any case is not a relative, or from any other person, maybe some charitable trust or foundation, etc. That of course comes under 56. But suppose you have friends of the family who are supporting you, all this will be exempt. There is only a rider, and I don't know why this rider has been kept, but it says that you should, to claim this exemption, you should have got the monies within 12 months of the death of the concerned deceased. Now, what happens if it is beyond 12 months? Why should there have been a restriction? I'm unable to understand. As far as, and this is applicable from the financial year 1920, assessment year 2021, as far as the contribution to the national pension scheme is concerned, you must be aware, friends, that the provision came as far as central government servants are concerned under section 80 CCD, that the employer's contribution to the extent of 14% would be treated as a deductible item, in the sense you would not be required to pay any tax on that. Similar provision, was extended to state governments. State governments were still taking time. Some have, implemented it. Some are yet considering that. But with effect from financial year 1920, assessment year 2021, retrospectively, this has also been extended to all state governments. It's a small provision, but nonetheless welcome in principle. 80DD, where you have a straight expenditure that is incurred for a handicapped dependent, then obviously, you get the deduction. But in case of a policy that is taken, where there is an annuity or a lump sum, there was an element of taxability, and that has been relaxed, and it has been provided that even if the annuity lump sum is received by the disabled dependent on becoming a senior citizen at the age of 60, as far as the policy holder is concerned, who has taken out the policy for the disabled, the physically handicapped person or mentally handicapped person as well, that would not be taxable. That is a provision that has been incorporated with effect from the coming year. Now, talking about tax rates, friends, cooperative societies have been a beneficiary in certain respects, because there the alternate minimum tax, which used to be 18.5%, has been lowered to 15%. As far as AOPs are concerned, where there are consortiums of corporates, there also the surcharge has been capped at 15%, just like as in the case of long-term capital gains. There are certain incentives, particularly under two sections, and I think they would indeed be very welcomed by the corporate world, because of the lull in the economy on account of COVID. You may have had plans and you might not have been able to start in time. Therefore, section 115 BAB, which allowed you to get the 15% concessional rate of tax. If you go into production, the initial date was before 31st March 23. That has been extended to 31st March 24. And similarly, for startups, the extension has also been given under section 80 IAC for one more year. Capital gains, there are one or two very interesting provisions. Of course, it's a consequential change. The reduction of goodwill from the block of asset is to be considered as transfer from the assessment year 21-22. But then one of the provisions, friends, which you have to keep in mind, and there you have, if at all, for this year, you are still safe, because there are a number of provisions in the finance bill which have been implemented or given effect to from this very financial year. Fortunately, this anti-avoidance provision is not retrospective in the sense it starts from the 1st of April of 21 and covers up to 22, but it will come into force with effect from the 1st of April 23 for the new year. And that is bonus stripping, as we all know. Now, we already had the provisions of section 94 under the Income Tax Act, where, dividend stripping was covered. And even in respect of units of mutual funds, you had this loophole plugged as far as this bonus is concerned. But shares of companies for years together, and I don't know why they were out of this bonus stripping provision, anti-avoidance regulation, they will be now with effect, means after 31st of March 22, they will all be covered. So until then, if during these 2 months, now even the finance bill is legally validating the bonus stripping part, because it says that it come into force only with effect from the next year. There are a series of amendments which have taken place as far as business deductions and allowances are concerned. I would like to very quickly run through them. My later part of the presentation, I'm going to take up on some very critical issues where I have strong views on the matter. But let me run down through some of these finance bill provisions, which I think should be more of information and education for you. Now, there is a provision. There has been, I read in the papers today, there has been a scare that, you will not get the benefit of Section 80G deduction if the trust or the institution does not upload, the statement giving the details. Now, let me clarify, this is not in regard to 80G or 80GG also. This is in regard to the provisions of Section 35 of the Income Tax Act, where 100% deduction is allowed in regard to sums or contributions that you make to research associations, university, college, etc. And this is an amendment which is applicable from the last year, because the government expects, the ministry and the department expects that whatever you are claiming should have been duly reported, in the format as they were required to. As far as 80G is concerned, friends, it is now getting into the, legislative mode with effect from the coming year. And therefore, you will need to ensure that whenever, you file your next tax return for the assessment year 22-23, for this year, all the charitable trusts who have received contributions or donations, will need to, it's something like this. If in your form 26AS, or now what we know as AIS, if there is no entry appearing in regard to a TDS or TCS that has been made in your case, you will not get credit. CPC will not give you credit. Similarly, now it will be important for you, if you are claiming any benefit of deduction in a Section 80G, you will need to ensure that this is duly reflected, in the reporting. So that was the first point. The second point, and which of course is going to affect in a big way several pharma companies. There have been two kinds of pharma companies. There have been pharma companies who have been disallowing on their own voluntarily the freebies, as it is referred to in the world of pharma, because the medical council regulations are that if you are giving any incentives or gifts or special benefits to doctors, etc., it is against the rules of the medical council, and therefore the departmental circular and the view was that such expenditure should not be allowed. Incidentally, there were decisions of various tribunals on both the sides, for and against. So finally, it was decided that, well, they will come out with a clarity on this. And beware, it is going to be effective from this very fiscal year. So 10 months have gone. If you have not taken it into consideration, if you're a pharma company, please keep in mind that you will have to ensure, because it says that if there is any expenditure for any purpose which is not permitted by the regulations of, any particular professional council, etc., or it is for any offense prohibited law, because people used to do compounding and they used to take the benefit. Similar provisions, such expenditure will not be allowed to the businessman. And particularly in regard to the benefit or perquisite that is given to your own, this is something which I think I should take a minute or two to explain. You will need to be alert, because there is a provision which fortunately, obviously, though the disallowance provision is coming this year, as far as pharma, etc. is concerned, but there is a provision under the Income Tax Act in section 28(4) that if there is any person who is carrying on a business or profession, section 28 subsection 4 requires that your provisions of deemed income will include such benefit or perquisite that you receive in the exercise of your business or profession. Now, what happens? There are agents that you have, there is nothing as far as law is concerned, just as pharma companies deal with doctors. You may have, as a businessman, you may be dealing with your agents and various other parties. And it's very customary that as a measure of sales promotion, you may be giving out gifts, you may be taking them out for various foreign tours, etc., as sales promotion. Now, sales promotion, if it is not against the provisions of law, it will be allowed as an expenditure, but with a view to ensure that the recipient of the benefit, gets this, because there are special schemes. You are told, okay, if you achieve this number, you will be given a car. Now, there is a new section that is introduced with effect from 1st of April 22. That is section 194R. Sorry, 1st of July it will come, because it's the procedural provision. 194R, and that provision says that just as you are required to deduct a 10% that you pay to a professional by way of fees, here, whether it is in cash or it is in kind, you would be required to make a 10% TDS on the value. And the section also says, suppose you are giving a car. So obviously, where is the money? How would you deduct? So it says that before you give out or make that expenditure, you will have to ensure that adequate provision is made. Now, this is going to really create a lot of embarrassment for businesses or professions, who dole out, these kind of special incentives for promoting their business, because the view now would be that in order that the income is being shown by the recipients under section 28(4) and a proper tracking is done, 194R will play its role. And if as a deductor you have not discharged your obligation, then you yourself will become liable to pay this out of your pocket. So this is something which will have to be considered, provisions of 194R. Again, something, which may not be very comfortable in terms of ease of doing business. In fact, so many friends keep on saying that every year, TDS and TCS provisions and the nets are widened. And the government, in fact, that's the biggest single source of revenue, the deduction and at source, the withholding taxes, the collection at source, and for which, you have to incur so much of expenditure. It is not always very comfortable. I know companies have to keep departments all together. They have to incur a lot of expenditure. Banks give services to the income tax department for collecting revenue. They get commissions. I wish there was some provision that corporates who are efficiently managing their TDS affairs and who are required to spend for that, at least, they are given some kind of an incentive as well, because they are ultimately doing a service to the income tax department. Friends, there is another provision which has also been introduced, and that is that the cess levied on tax. You are aware of the health and education cess, which is currently 4%. It used to be 2, 3, then it came to 4 now. Certain courts had taken a view that this cess is not in the nature of tax, because Section 40 of the Income Tax Act provides, as you must be well aware, that tax that you pay, whatever it be, is not deductible, particularly for earning income or conserving your wealth. So income tax and wealth tax have never been allowable deductions. But a view that came up was that cess is something different and it should be allowed. There was this High Court view. The matter was pending in the Supreme Court, but the government has taken a firm stand, and it does not do this very often. But here they say that this amendment will be applicable retrospectively from assessment year 2005-6, 16 years back. So, but, to be very honest, I had always been advising corporates that, this is the last thing you would want to do. But then, many times you're tempted because there is some decision which may not be necessarily the right decision, but then you get tempted to make a claim. So you will have to be at the receiving end, in case you have claimed it in the past. 43B, a provision is conversion of interest payable into debenture or any other instrument not to be deemed as payment of interest and shall not be allowed as business expenditure. So 43B, that provision is there, which is coming from the coming year. Friends, there is a provision as far as corporates are concerned who are receiving dividends from abroad. So foreign dividends, you had a concessional rate of tax, particularly where the holding of the corporate was more than 26%. So that used to attract a concessional rate of tax of only 15% and 115 BBD. Now that has been decided to be withdrawn. So such foreign dividends will now attract the normal tax. You have to keep that in mind. What is going to raise a big amount of litigation? In fact, almost all courts were unanimous on this, and even Supreme Court had given its verdict that as far as Section 14A is concerned, my friends from the profession and even taxpayers are mostly familiar with this, that 14A says no deduction would be eligible in respect of expenditure incurred in relation to exempt income if there was no exempt income which had accrued or been earned during the year. Now, the departmental view is that even if you have not earned any exempt income, according to the formula they have under Rule 8D, they say that automatic disallowance must be there. Now, this is going to create further litigation, but you will have to be watchful. Of course, if you are able to take a stand that, the 1% formula does not necessarily apply to you, and you are able to identify or quantify what is that small expenditure, it would be wise to do that, practical and prudent, and you can smartly get out of the situation. Friends, as far as search, seizure proceedings, etc. were concerned, against income which was identified there, people used to do mischief by trying to book losses and set off against such undisclosed income, losses, unabsorbed depreciation, etc. So it has been provided under new Section 79A that there will be no set off of any such losses or unabsorbed depreciation. Well, friends, I'm just about a little over halfway. I would like to now take up one or two very sensitive points. I think these are really irksome. And when I said that the ease of doing business, or FM is talking about reposing confidence in the taxpayers, making the tax laws simple, the system stable and predictable, these are a couple of provisions which are not going to work in that direction. And one of the most disturbing provision about which there was no reference to the FM speech at all. In fact, I am not even aware whether she knew about it, that there is some such provision in the bill. But a very notorious, mischievous provision, with due respect, I would say, has been introduced. Now, those of you who are aware, we have Section 68 of the Income Tax Act, which deals with cash credits. You know, the word is cash credits. It necessarily does not mean, it could be the credits could be coming by check also. But anything that you credit in your books of accounts is referred to as cash credits. And the simple rule is that if there are such credits, and they could be either by loan, borrowing, they could be, you know, in the form of share application monies, etc., against which you allot shares. If such monies are credited into your books of accounts, and during the course of the assessment proceedings, the assessing officer asks you something about that regarding the explanation for the source thereof. And the section says that if during the year there is some such credit in your books and you are not able to explain the source, or if the explanation offered by you is not found to be by the assessing officer to his satisfaction, in such a case, this amount, which is added as cash credit under Section 68, it is treated in the nature of your undisclosed income or investment, and therefore, under the provisions of Section 115 BBE, it attracts, you know, I would say 84% of tax and penalty. You'll ask how? Because there is a flat rate of tax of 60%, double the 30. There is a surcharge, hefty 25% flat, which makes it 75, 60 plus 15. Then there is the 4% cess, which would make it 78. And there is under Section 271 AAC a penalty of 6%. So that would take it to 84. And if something comes to be added in your assessment, by the time, you know, the tax computation, etc., is done, there would be interest also. And if you add the interest to that, it could well go up more than 100%. There have been several instances. So this is a provision, you know, which had to be handled with care. Unfortunately, it has been tampered with this time on the ground, because the memorandum explaining the provisions of the finance bill says that there are taxpayers who are trying to use loans and borrowings in a mischievous way to bring in their unaccounted money. Now, with due respect, I would say this is a very general statement to make, and just on that, try to corner everybody just because then they are referring to certain court judgments. And court judgments, let me tell you, they've been very sound on this subject. Courts have taken views very objectively. In several courts, they have confirmed cash credits, several decisions. They've confirmed cash credits in favor of the revenue, if the circumstances are such. But the courts have laid down the principle that if the identity of the person who has given the loan or borrowing is proved, if the genuineness of the transaction is also proved, you know, the onus on the receiver of the loan or borrowing stands discharged. And if at all the department has got anything to say, they can always make an inquiry in the other case, because the party has also given a confirmation. There is a confirmation, there is identity, there is creditworthiness, and above all, it has come through the banking channel. You know, if it is by cash, it can still be doubtful or debatable. But with all this, the courts have taken a very positive view. And therefore, the system was going on quite smooth. Now, the apple cart has been upset by this finance bill, and this is really, you know, giving you a chill down the spine, and which says, it is proposed to amend the provisions of Section 68 of the Act so as to provide that the nature and source of any sum, whether in the form of loan or borrowing or any other liability credited in the books of the SSE, shall be treated as explained only if, so they put, you know, a negative condition, only if the source of funds is also explained in the hands of the creditor or entry provider. Now, what are you trying to say? I am sitting here with Bakul Bhai, and Bakul Bhai, I receive from him a loan, a friendly loan. He gives me, says, okay, keep this amount. It's to be returned back to me. In fact, there are people who are doing business, non-banking finance companies, finance cooperative credit societies, who take from their members, who take from their constituents, customers, because the only exception is in regard to those venture capital funds. Please bear in mind, in 68, all these other genuine cases are not exempted. So what would happen, say, if he gives me something and my officer asks me that, Mr. Mukesh Patel, you explain, it's fine. You have given the identity of Mr. Dholakia, you have given his PAN, you have given his confirmation, but that is not enough. If he has given you 10 lakhs of rupees, now it is on you to explain how Mr. Dholakia got this 10 lakhs and how he gave it to you. Fortunately, they're not saying why, but the source of the source. Now, first and foremost, would I at all, it would be hugely embarrassing if I have to ask him, sir, give me your tax return, give me your bank accounts, because my officer is asking me, and if you don't give me that, my officer will add that as my income. Now, maybe, if it is not explainable in your case, they could always take action in your case. And they make independent, in all these cash credits, they have 133.6 inquiries. The department directly writes to him saying that, have you given this money to Mr. Patel? Is it okay? What is your... So he is then duty bound to explain to the... But if I have to ask him, I think this is not done, friends. This is one of the biggest stumbling blocks to the ease of doing business, about which the FM talked, at the top of her voice. Friends, how do you expect? And just imagine the plight of those who are doing this business. They are accepting money. They are, paying interest. Now, just because some of their constituents, customers, members, are not able to explain, or their explanation, is not accepted. I think this is one of the most negative proposals of this finance bill, and we will need to raise our voice against this, because, it can, fortunately, we are in the realm of faceless assessment. So nobody can play mischief in that sense of the term, to harass or, to promote corruption. But nonetheless, if it's my misfortune and I have an officer in the faceless scheme who is not able to understand my point, I would have to go through, for whatever I have accepted, a liability of more than 100% and then fight it out. I think this is something which really, really needs reconsideration. The next, friends, is, even last year I said, whenever the FM starts the speech, they try to always get something as if it's a big trump card. And I recall last year, it was the 75th budget, because from 47 to 21, that was 75 times. So the FM, in all good faith, said, okay, I want to salute those who have attained 75, those senior citizens, 75 or 75 plus, and I want to give them the benefit of exemption from filing their returns of income. And everybody, the house, they tapped their desks and everything was great. Until we saw the documents in the finance bill, and we found what were the attached conditions. The conditions were, number one, that you should be getting pension income alone. And along with that, okay, the only other income you could have is interest. pension and interest. To that extent was fine. But then they said that your pension and interest both should be deposited in the same bank account. So you should have only one bank account. Now it is something like this. How can you get, a person who is 75 plus, who is having only pension income, nothing else, no dividend, no capital gains, nothing, who is having interest, okay, fine, he's having interest on deposit, but he is having only one bank account and that interest is also being deposited into that same bank account where the pension is being deposited. So the whole scheme became a big farce. Something similar to that has happened this time as well. A scheme with a very laudable objective, because the FM talked about promoting voluntary compliance, reposing faith and trust into the taxpayers by making things easy for them, simple for them, trying to ensure that litigation is curbed. Now, here, this time, as you know, you would have heard when Part B started, she talked about the updated return scheme. Now, there are two sections, Section 139(8)A and Section 140B. Time has a constraint, so I will not be able to go too deep into it, but let me very quickly point out as to why I fear that this scheme may be nothing short of a flop show. A very laudable scheme in principle, but because the way it is designed, the way it's packaged and sought to be administered, I hardly believe it is practical enough that anybody would want to go and avail of this. Now, let me give you an example very quickly, and I'll explain this point. Take, for example, now this is going to be implemented from the coming assessment year 22-23. That is your financial year 21-22. If you are a regular taxpayer, your date of filing return is 31st of July, 31st July 22. If you have not filed your return in time, then you can file it maximum belated also up to 31st of December 22 under Section 139(4). And under 139(5), if you have filed it earlier and you find that there is some mistake, you can revise it. So the whole objective and idea is that now the government says, and the FM said that we have come out with our AIS, Annual Information Statement, and taxpayer, there is so much of voluminous data, he may not have been able to check and see, and therefore, if he has made some mistake, he should be allowed to correct it. But the challenge always used to be that between July and December, in 6 months, if you have to file your return, or revise return, how do you do it? Because after 31st December, you could not do anything. So this scheme brings in this very concept that, okay, under this scheme, you can go up to 2 years beyond the end of the assessment year. So the assessment year is 22-23. Under the scheme, you can file an updated return up to 31st March 25. Now, what are the provisions? The provisions are that if in the very first year, that is up to 31st March 24, you file it, there is a certain rate of tax and whatever you have to pay, additional tax, they call it. And then in the second year, there is a higher rate of tax. But just imagine, you see, first of all, they have said that who can avail of this benefit. So they have ruled out, and I have no grievance with that. There is no reason why amnesty should be given to this class of people, those who have done money laundering or black money, or who have been victims of search, seizure. Even 2 years prior to that, they are not allowed a survey. Fine. In all these cases, requisition of books, you are not allowed, just as most of the amnesty schemes also do not allow you to do this. But then they say that if an assessment is done, or even if it is pending in your case, that means you have received a notice for scrutiny, you will not be able to go for this scheme. Now, please understand, you can file your return for 22-23 up to 31st December 22. As you know, under the provisions of the Income Tax Act, the notice under Section 143 for scrutiny if your case is to be picked up, has to be issued to you by 30th of June. So within 6 months from December, by 30th of June 23, you would get to know whether your case is picked up for scrutiny or not. Now imagine that it is picked up and it is not picked up. Suppose it is picked up, then your wisdom or sagacity that you want to get the benefit of the scheme is not going to work, because even if you realize this, doors are closed. And suppose you do not receive notice. You are a human being. What will your human nature say, instinct say? अरे बाबा अभी तक किसी ने पकड़ा ही नहीं, किसी को पता ही नहीं चला मेरी क्या भूल थी, क्या गड़बड़ थी, अब क्या पता चलने वाला है किसी को? Who will know about this? So why do, just as you have this saying in Hindi, "Aa bail mujhe maar," you would go on your own to the department 1 year or 2 years and say that I have to pay. And you know what you have to pay? Under the section 140B, if you are within that 1 year window, you have to pay all your regular tax plus all the interest. And though it is called as additional tax of 25%, that 25% additional tax would be 25% of the amount of your regular tax and interest thereon. And interest is under 3 provisions, 234A, 234B, 234C. So your regular tax and interest, if it was just regular tax, 25%, it would have been 37.5, you may still have thought. But if you take your tax and interest and 25% of that, and maybe you have to also pay the fee, that 5,000 if it's a belated return, etc. What is it going to be? You would rather say, come on, because I have received a notice, I can't do anything. And since I have not received a notice, why should I be overwise now and go to the department, and show all? And if it is beyond 1 year and up to 2 years, that will be 50%. So 45% tax and 50% of the amount of interest, etc. With all due respect, it is something like this. You have a door. You don't want to keep it open for a big list of people, so nobody can enter in. And when you keep the door open, those who have not received that notice within 6 months, why would they at all come within that 1 or 2 year periods? So with due respect, friends, this is very likely that this may become a flop show. A well-intended scheme will not work. There is constraint of time, but I'll go very, very quickly. I think I'll not refer to crypto tax because Bakul Bhai already mentioned, and we have no grievance about it. 30% is fine. We all wanted it to be taxed. There is a 1% TDS, etc. And therefore, let that be taken care of. There are some very, very special provisions that have come in regard to assessment and appeals. Appeals, a good provision is that there will be a collegium of commissioners who will decide that if the department is trying to pursue an appeal to the High Court or Supreme Court, they may very well say that, okay, we will wait for an earlier year's order to come, or in a particular case, the matter is pending, and we will. So with the consent of the taxpayer, I think this litigation and dispute management can be done well. It's a welcome scheme. Subject to that the collegium is active and objective. On the assessment procedure, I have been one of the biggest champions and propagators of the faceless assessment scheme. And when you were not permitted the right of video conferencing, it was kept discretionary. My friends are aware that both under assessment and appeals, I used to say that, it's my right, and I cannot be deprived of hearing. Fortunately, the appeal scheme came, because it was challenged in the Supreme Court also. And then a statement was made, they built into that appeal scheme. Similarly, under assessment also, they have brought in this provision. There are some other small little changes, including, one in the favor of the department, that the assessment will not be treated as void merely because certain prescribed procedure is not followed. And courts have been taking a call that where procedure is not followed, it can be set aside and it can be redone rather than quashing it altogether. There are some small provisions in regard to reassessment. They are technical, so I'll not get into that. I think I'll take up the last point, and that is in regard to the obligations that have been widened in respect of tax compliance, because TDS, as I mentioned, you already have this provision of 194R, 10%. Similarly, they have brought in a provision, when you buy a property under section 194IA, there is a provision that you have to deduct TDS at the rate of 1% in case of value of a property, the sale consideration being more than 50 lakhs. Now, the provision that has been introduced is because many a times, the stamp duty valuation may be, say, 54 lakhs. But just because you want to escape the TDS net and get out of reporting, you may decide 49 lakhs and 80,000. And then you may try to circumvent 50C lawfully in some other ways. But this was a loophole. So they say that now it will be 1% TDS on the sale consideration or stamp duty value, whichever is higher. So that is there. Then similarly, on TDS, they have also said that, you used to be given the status of a non-filer if you had not done it for 2 years. But if you are there doing it for 1 year, then now they say that even if you have not filed a return for 1 year and there's more than 50,000, etc., TDS in your case, then you will attract TDS at higher rates. These are some things which can be looked into. Friends, last two observations, I am not able to touch charitable trusts. There is a whole plethora of provisions in that regard. Maybe on a professional forum, we'll discuss it sometime separately. But I would like to make a mention here, particularly in the light of this scheme that I mentioned, a flop show. I would say that ideally, what is the most practical and sensible advice that I can give to my taxpayer friends or even tax professional brothers and sisters? Please ensure, in Hindi, I always say, आपको ये पता होना चाहिए कि आयकर विभाग को आपके बारे में क्या पता है. And therefore, the least that you should be doing before preparing and filing your tax return is go through thoroughly your AIS, Annual Information Statement. And if you have done that, and if you have filed your return, well, you need not even be required to become part of that flop show scheme. So the message is loud and clear. The government has a system, I always now even say hats off and salute to CPC. There is a wonderful person who is heading the CPC with a very dedicated team, a dear friend of mine. And I often compliment him because I know of cases, Bakul bhai, that you file your tax return and within minutes, you get the intimation. And refunds, you can get even in hours. There are instances of that. So gone are the days. I think, technology, artificial intelligence, the entire, the faceless scheme spirit, and all this together, that has given the revenue buoyancy, and we wish that that continues. And we really have a trust-based, voluntary compliance, litigation-free, a simple, a stable tax administration, and we would all be happy. But before I conclude, I've taken a couple of minutes more, but I would not want to end without this, because the finance minister referred to Mahabharata. And she also quoted saying that, the tax administrator must be taking a very objective view of things and not punish or put the taxpayer to pinpricks, for small things. Now, there is not a small, but a very major pinprick in this budget, for which I also want to make a mention before I conclude for the day. And that is under the provisions of section 272 capital A, subsection 2. Friends, you are aware that this is a penalty that is levied for certain lapses on your part. And imagine, the kind of compliances that you are required to, completely unintended also, you may get into these traps. It's something like this, while you are driving a car, even getting a traffic challan sometimes is, you may have just crossed over 5-6 inches into that zebra, and the camera clicks and you get a challan. Now, the traffic department, of course, here in Ahmedabad, they are giving challans of 500. I don't know, some Ahmedabadi must have sent across this message. Under 272A2 for any lapses, and for each lapse individually per day, the penalty until now used to be only rupees 100. And now they say that our audit department says this 100 rupees is too meager. Kya hota hai? You said, no, what is 400, 500? So they said this 100 is too meager, make it 500. 5 times the rise in penalty. And I'm mentioning this because you can become a victim of penalty for no fault of yours. Maybe it's your clerk or your accountant or somebody, or sometimes even because of Infosys. With due respect, I have nothing against them, but because their system does not work and I am delayed. There are a whole lot of penalties and people don't know. Notice of discontinuance of business has to be given within 15 days. If you have not done, per day, 500 rupees. Your returns and statements for TDS, TCS, AIR, any response to inquiries, in case of charitable trusts, you're filing ITR 7, you don't have any tax to pay, but you have made a little, suppose your accountant is down with COVID and you delay it. Already you are paying 5,000 rupees late filing, but even otherwise, they say per day, 500 rupees. 15G, 15H, because somebody is giving me, I have to give it to the, department, per day, 500 rupees. And what is most disturbing is, I've always been saying, even while I was on the task force, this is what I pleaded with, and it's part of our recommendations that we should do away with this. Now, under 26 AS and AIS, all my tax deductions that are made or tax collections that are made are captured on the basis of the statement. And if I file a statement belated, you already penalize me for that 500 rupees per day. But now imagine, a company which has to issue, say, 5,000 certificates of TDS in Form 16A for interest or dividend that it is paying to its depositors or shareholders. And for whatever reason, and what happens is now this certain jurisdictions, TDS authorities in particular, they know that you have downloaded a certificate only 15, 20 days later or 1 month later, and some people don't even download. Why? Because nobody wants to ask, no depositor or shareholder comes to me saying, please give me. They know because on their 26 AS or AIS, it is already seen. So why do you want this paperwork? But the section, this outdated, obsolete section still continues with that. So just imagine a few hundreds or thousands of certificates to be issued, and you are not issuing it, not because you don't want to, but because you want to conserve paper. And nobody wants that. They are happy with their 26 AS. Gone are the days when you had to attach them physically. But even for such most insignificant technical or venial default, 500 rupees a day. Friends, this frustrates the very objective of the budget presentation, saying that it is trust-based, it's voluntary compliance, simplicity. I'm not doing anything wrong. For what am I being punished and why? Forget my 5,000 rupees. In 8 or 10 such technical penalties, 5,000 rupees they'll take away from me. So the point is, if you are not able to give me something, at least don't take it away the wrong way. Even on the traffic lanes, okay, I must be disciplined. But here, for such technical and venial defaults, I think we all need, as taxpayers, citizens of this country, to raise our voice against this absolutely atrocious kind of a provision. I would like to conclude by saying and sharing this beautiful Urdu couplet, which says, कुछ ऐसे भी मंजर हैं तारीख की नजरों में, लम्हों ने खता की थी, सदियों ने सजा पाई है. Friends, such mistakes, such blunders of drafting in the act can create unparalleled, inimitable hardships, harassments, inconvenience. And let us all pray that at least in this year of Amrut Kal, if a taxpayer is not given the nectar or the Amrut, at least he is not given the wish or the poison of such atrocious penalties and such ridiculous provisions as in the case of Section 68 and cash credits. That is all that I am praying. Bakul Bhai, I am with you. Let the nation march forward. And as the Prime Minister himself said, let us look forward to India at 100. But then let us also consciously rise and stand up for any injustice, for anything wrong that is being done. While we salute the FM for all the good in the budget, all the tops, amongst the flops that you pointed out, these are also some of the biggest flops. These are some of the biggest, spining chills into the budget, which we must overcome. Thank you, AMA, my own alma mater, Ahmedabad Management Association, as we complete this 42 years. For me personally, it's been the 47th budget I've been analyzing since 1977. And Bakul Bhai, I look forward at AMA to completing the Golden Jubilee with you. Thank you. Thank you so much. And before I end, I would like to conclude. I think I would be failing in my duty if I were not to mention, we are always known as a trio. Bakul Bhai, Jainarayan Bhai, and myself. And we've been best of the friends over all these years. Our dear friend Jainarayan Bhai, because of some difficulties and challenges of his health, he could not join, but we wish him good luck, and he's always there in our minds. Bakul Bhai, we wish that whether the trio is together or not on the stage, we will be there together to voice out the concerns, budget after budget. Thank you. Jai Hind.
Thank you, Mukesh Bhai. I think fabulous analysis, and I have already seeing in the chat box so many people complimenting and thanking. And I would say that, of course, one, we are all missing Jainarayan Bhai. At the same time, we are all looking forward to that Golden Jubilee. Everybody, I'm sure, and curiously, maybe the budget is one, but the analysis of budget is more curiously or anxiously waited for by many of us, I would say. So thank you for the insights. Of course, I'm not going to repeat or summarize anything because that would not be the right thing to do. But one thing that certainly feels like music to ears that Dr. Dolakia mentioned, Sir Bakul Bhai mentioned, was there's a potential upside to this growth, and which certainly gives a fiscal space. And if certainly, thus the risk taken was worth it, which feels good that at least we are in the good regime, and coming here should be a good growth here. Thanks again for everybody to join, and certainly a warm thanks again for Bakul Bhai and our own Bakul Bhai and Mukesh Bhai. Thank you so much for participating and presenting. Thank you.